All right, hi everyone. So we're going to start with our corporate reporting, ICAEW advanced information for July 2022. Earlier, you might have gone through the um, walkthrough regarding the advanced information. Now, I'm just going to take you through a detailed um, breakthrough of the advanced information. So first, I'll tell you the good news. Good news is that you don't need to use the software a lot, but some to an extent, the examiner is giving you a lot of stuff in advanced information regarding the data analytics software. Bad news is if you are a number crunching person, this information can be a bit challenging for you because this is more towards audit. Okay, so again, if I go towards information, you all know the year end is December 2021, and you have 11 months data. I hope you all are aware in the exam, you will be given only December 31st, December 2021 data. You will not be given full 12 months data. Please note that. Okay. Now, couple of things. So you are MFE, you were appointed as Gazelle's auditor. Shortly after, you had an introductory meeting with Paula Elliott, the FD, and now they have summarized information in briefing notes. Okay, so I'm not going to go through the whole information because you have already gone through the walkthrough of the information, I assume. Okay, but please do not forget the audit materiality. Okay, now few things. What is the business about? So it's about providing employment staff. Okay, so there are two types of services it is providing: permanent job permanent job recruitment service in the UK, temporary contractors in the UK and rest of Europe. Okay, so we need to change this permanent. Okay, now understand a couple of things. I'm sure you all are aware that IFRS 15 is being applied over here. Okay, cool. No, this should not be an issue for you. However, you should be aware about what policies are being adapted for both stream of services. So repeat after me. There are two revenue streams which the company is providing: permanent staff, which is obviously UK only, and then providing temporary staff in UK and rest of Europe. Okay. Now you need to understand a couple of things. If I go for permanent staff UK, when is the invoice being raised? So understand when do you record a revenue and when are you raising invoice? Okay. So for example, for permanent job recruitment, it says revenue is recognized when applicant commences employment with the client. Okay, so for example, you are a company, you're providing employees. Okay, so when are you recognizing the revenue? When the employment is actually starting, which is fine. Okay, but this is crucial. As part of the terms of business, Gazelle offers a full refund if within 3 months of appointment, the applicant leaves the client's employment. You need to understand there's a risk over here. What is the risk? Risk is where it says refund within 3 months when applicant leaves the client, right? IFRS 15 says you only record a refund up to the extent where that refund is confirmed. Okay, if you have a doubt about it, okay, you cannot record a refund, and you record revenue up to the extent where refund is not possible, right? Okay, if you know, for example, 60% of, let's say you're selling units, okay, let's say 60% of the units are confirmed, are possible that they're going to be returned, you cannot record revenue in respect of that. Okay, however, let's understand what the issue is. So it provides permanent staff UK when employee submits timesheet and invoices raised. So what happens is in this case, you need to understand entry. When is the revenue being raised? When employee submits a timesheet, invoice is raised. So receivable debit and credit, accrued income. You need to understand that. Okay. Now, then says in early April 2021, Gazelle appointed Gary Cat as a new director and head of permanent recruitment. Paula told me that the board expects Gary to introduce some changes to the contract modification. There is probability of contract modification. So for example, you're right now providing you're providing any, let's say, just specific terms of the contract for the employees, right? For permanent job recruitment services. So maybe you change the scope in terms of the contract in such a way that this contract scope changes, okay, materially changes. So if it materially changes, it is something outside the scope which wasn't agreed originally in the contract. That's a contract modification. So if that is the case, then a new contract will have to be made. Please note this. Okay. Now let's go this. There's one more point over. As a result, revenue may increase in the year 21. Now this triggers my thoughts. It's okay to make changes in the contract, but what kind of contract modification is taking place? Maybe the client is in a position where he wants to inflate his revenue. I don't know. I wouldn't. Seems like he's working towards manipulation of revenue. I don't know. So maybe I can say risk of revenue being overstated at year end. Audit point. Now let's go down. Then now we come towards temporary staff. Okay. Client approaches Gazelle when they need staff on short-term basis. Gazelle has responsibility for providing a suitable temporary job specification approved by Gazelle's client. Now there are two methods. Method one, okay. This is quite interesting. So over here, Gazelle's accounting system generates a sales invoice when the employee temporarily submits the online timesheet. Okay. So again, I see a risk over here. Just think of it. I mean, now think of it logically. So when you're providing a staff in the starting, there's a contract that has taken place. Let's say you are an employment service provider company. You provided 2 staff to the company. Okay. You are recording revenue when a timesheet has been submitted. Shouldn't revenue be recorded when a contract has been made? Okay. Are you trying this line is basically telling me revenue or the risk and reward is being transferred when the timesheet is submitted. Okay. So ideally, you can also have a policy where you recognize revenue over the period of time. So for example, first if the if the person is hired or the employee is hired, so on commencement, this much percentage will be charged. On service, this much percentage will be charged, and on submission of online timesheet, this much percentage will be charged. So that is how you can go about it. But clearly telling me, and you are telling me you're booking a receivable when a timesheet is being raised. That is not logical. That is quite manipulative. Okay. What if I'm not working, I'm not providing any services, and I'm simply raising a timesheet? I mean, you don't know how controls are working at the other end, right? So this is a serious risk. Okay. Risk of revenue being recorded, or you can say inflated at the time of invoice is raised when timesheet is submitted, i.e. bogus timesheets. Another point. Okay, so this is for, I'll just write method 1. Okay, so this should be, so far this should be fine. Okay, so again, this should be fair, fairly straightforward. Okay, and I'll also add one more thing in the above point. So you can also state one more thing. Overall revenue is recorded. Applicant commences. This is a right policy, I would say. Employment with the right. Follow this. Not. Okay. Now let's go down. Method 2. Method 2 again. Now what another thing you have to do is when you're using your software, try to look for evidence where things have gone wrong in terms of this entry. Okay. Right now they haven't highlighted any because there are not any entries. So you can pick out any random entry in respect of this treatment. Okay. So if you come on method 2, so they're recording receivables in account 2109 and sales in 4000 temporary UK. Okay, which is fine. Seems like a receivable that is being booked. Okay. But the problem is now, major problem I'll tell you over here. For temporary stuff, when it is when approved by the client and manual entry is passed. Okay, so what is happening over here? Understand the scenario. The sale invoice is recording Gazelle's account record when it has been approved by Gazelle's client. Okay, sales invoice are recording account code 4000 and account code 4007. So you need to understand how the approval process takes place. Okay, you do not just record or raise invoice when you have an approval. It should be fully contractual between two parties, right? So I don't see any this is a bit weird. Approval can be approval, the word term approved. I mean, how do you want it approved? Is it via email, via correspondence? You know, you need to have a contractual term. Now the problem is I'm okay with the word approved even, but the story over here creates the issue. Occasionally Gazelle clients are slow to approve sale invoices, okay, for payment in respect of services provided to them by company temps. If client is slow to approve the invoices, Paula prepares a manual entry each month to approve for unapproved sales. What is happening is Gazelle is saying, see, he's telling to the auditor right now, see auditor, we have a policy for recording revenue, temporary revenue on basis of what? Approved revenue policy, okay? Approved approval from the client. If the client is too slow, what do we do is our finance director, she will pass a manual entry each month in order for unapproved sales. This is very wrong. So in reality, let's say in year end, I have 5 or 10 or let's say 20 entries of sales unapproved from the client. So I'm going to record them. What if they're not going to take place? Artificially at year end, my revenue will be inflated. So, right. So risk of unauthorized bogus sales being recorded. In substance, there may be no sales recognition. Simply Paula wouldn't be passing increase, and as a result, revenue may be overstated, as well as receivables being overbooked. Okay, you getting me? So let's repeat. Let's repeat again. When does the revenue now for permanent staff, revenue is being recorded when the applicant commences employment with the client, which is no issues, right? However, contract modification may take place. Okay, and this can create issues for at year end. And another issue could be that this may inflate our revenue at year end. Okay, you need to look at it from the auditor's point of view. Remember, you are the auditor in this. You're not the accountant, you are the auditor. You're meant to catch breaches in the IFRS or breaches in the principle of accounting treatment. Okay, I'll come to these heads in a bit, but they are not so important or crucial right now. Then you have what? Then you have temporary staff. You're providing temporary staff on contractual basis in UK and rest of Europe. First one is method one. Okay, you are raising sales invoices when timesheets submitted by the employees, which is wrong. So because they could, and maybe I'm just a bogus employee, just simply raising my timesheets, and through this, Brazil might be just overbooking its revenue. I don't know. This could create a lot of issues, fictitious revenue. Then you have method two, providing temporary staff to UK and rest of Europe. Again, main issue over here is what? You're recognizing revenue when? Based on the approval of the client, but if it's too slow, manual entries will be passed by Paula, and this may create issues. And further, what Paula also does is when a sale invoice is raised and processed, Paula enters a reversing journal entry to remove the accrued income. This is very risky. So what is she doing? You understand one more thing what Paula is doing. Initially, debit accrued income, credit sales. Okay, understand this. This is when no approval provided, when sales takes place, and when sales invoice, or you can even sales invoice takes place, debit, she reverses it. So she is debiting, possibly she would be, I would say she would be crediting accrued income. That is a major issue. This will create or inflate accrued income artificially over overstate our profit. Understand the issue. Paula passes accrued when no approval is provided, accrued income debit, sales credit, and when she reverses the entry, accrued income would be credited. In reality, our other income would be inflated, right? So you need to understand that Paula reverses, so she would credit it. Okay. Now, so we've talked about what? We've talked about number one, permanent staff. Okay. And overall revenue recognition policy for permanent staff. And that's how it should be. issue of contract modification. You need to understand that. I've explained you temporary staff concept as well. So, and the issues that can rise from that. Important IFRS 15, obviously, this is important. Sales return basis, record revenue to the extent okay. Okay, we went through this. We went through when applicant income. I've told you about this. Okay. Important heads 4001 science clinical engineers. You need to know these accounts. Okay. I'll talk about these 3 points in a bit, but understand what kind of risk can arise. So breach of sales return basis. So if you remember for permanent staff, revenue is recorded up to 3 months when applicant leaves the client. Okay. So risk of sales being recorded up to the extent for returns. This is a huge risk. Inflated revenue manual. See now, you need to understand risk of adjustments passed by Paula to window dress the revenue for the year. Remember, she creates the accounts and she passes entries. Remember, she creates the financial and passes and records adjustment. Overstated accrued and uncovered receivable. This is mainly for which one? Temporary staff method 2. We discussed this. Okay. Wrong policy of invoice being raised for UK. I told you revenue should be raised or should be recorded contract. Not on see, I'm just breaking through the point and being just logical. Risk that there simply be booking the revenue, the receivable balance. In substance, there is no recover breach of IFRS 9. Wrong treatment of credit notes. Okay, we'll talk about this. We'll talk about the below points. Now let's understand few things. So who is the finance director over here? Let's understand who's the financial. If we go down, Paula is the finance director. Now weakness is what now Ariana Oliver. She's the HR and payroll manager. Now my problem over here is why is the HR and payroll manager reporting to the finance director? Okay, it should be the payroll, it should be the HR director, right? Accountant should report to the director, that is fine. Trainee accountant should report to the accounting, which is fine as well. Paula is an ICAEW accountant and has worked for Gazelle since 2010, which is quite a long time. She's worked there for 21 years. She is head of the finance function. Paula is responsible for the production of the financial statement and quarterly management account. She processes all types of accounting entries, but mainly manual entries. Wow. So no check is being kept on Paula. Okay. She records all entries in accrued income. She also posts manual entries for prepayments and accruals expenses. She sometimes helps Leonium to post company temp sales invoicing, credit notes, and account codes, which means she may now there could be an ethical point over here. She may put some pressure on Leo and pass some unadjusted entries. Okay. Melissa, who is a trainee, also posts invoices for permanent job recruitment services in account 4001 perm staff. Now understand what is the issue over here. So what is the risk? No review of no review and approval of the entries passed by Paula. No control side and trail on Paula's activities with regard to the, because see, if no one's keeping a supervision, she will pass inaccurate entries, right? Lack of segregation of duties. She produces and records and enters many entries. What is the threshold? Okay, now this is a problem. She may put undue pressure on Leo accountant to window press temporary staff revenue stream. That is Paula May, because obviously Leo is a junior to Paula. Paula might, sneak in with Leo and see what's going on, and she might tell him, this seems a bit low. How about do some classification, manipulate some, passes entry over here. She might put pressure. Okay. And then Melissa also posts invoices. Now Melissa is a trainee. She should not be posting invoices. She should be assisting or performing work under supervision of Leo. This is an issue. Okay, this sounds cool. HR and payroll manager. Okay, the HR manager is responsible for payroll preparation, core staff, and temporary staff. Okay, so I don't see a major issue over here. Ariana does not process any sale invoices. Okay, but obviously she does need to cross check, because some of the fees is charged on, because fees is charged. Let me tell you one thing. Gazelle charges each client a fee based on percentage of successful applicant starting salary. Okay. Okay. So now my point is, if Ariana is not keeping oversight on the sale invoices, this can create issue, right? Because some of the fees is based on salaries. So in reality, a check on the salaries will also have to be kept, right? Because this Ariana has worked for Gazelle for many years. She's experienced in payroll preparation and all aspects of HR. Ariana processes the payroll for both employee temps and Gazelle core staff. Okay, so for employees temporary, okay, we need to understand that any payroll payment that would need to be paid, it has to go through Ariana. Like, understand this. For temporary staff, okay, the invoicing has to go through Ariana because she is responsible, or she could provide a better, she provides a, because she is responsible for processing the payroll, she will be paying the staff the salaries, right? So, and we are in return going to charge fees. So the sales process, at least the invoices, has to correspond with the um, invoicing, okay, or the payroll of the client, okay. So not a major issue. I would only suggest that Ariana should not process the sale invoices, but she should receive, or a reconciliation should take place between the sale invoices and the payroll staff. Okay. Leo. Now Leo has a lot of work. I see Leo doing what? He's responsible for invoice posting. Okay. He's responsible for permanent job recruitment services and responsible for credit control for receivable. So he's posting invoicing, invoice posting, and credit control for receivables. Okay, Leo is responsible for processing the purchase invoices. Okay, as well. Leo also processes sale invoices to Gazelle client for the service provided by company temps. Okay. What is the risk over here? Risk is lack of segregation of duties. Um, Unauthorized entries recorded by you. Okay. Lack of supervision of entries recorded by Leo. Okay. What is the threshold limit authorized for the accountant? What are the bases on which entries are recorded at the highest, i.e. weekends, time offs, lack of authority matrix. Okay, we do not see any approval, or I could say maker and checker process. These are a lot of issues, and it says Gazelle recognized that there's an internal control weakness as Leo is responsible both for the recording of company invoices and generating sale invoices of Gazette client. Paul Elliott has. So what is he doing? He's raising invoicing and recording invoices for Gazelle itself, as well as for the clients as well. So obviously it's a small company, but he can play around. On a monthly basis, Leo transfers an amount representing cost of Gazelle's core staff from to temporary. So what is he doing? He's passing entries from cost of Gazelle's core staff from 60 to core staff salaries. Okay, this is obviously so unauthorized, or you can say inaccurate entries being recorded from core staff to temporary staff accounts. Understand one thing over here. What is Leo doing? He's passing the entries from core staff to temporary staff. Okay. If you understand, he's passing entries from where? Core staffs to temporary staff accounts. The problem is this could affect what? The gross profit margin. So let's say for employee temps, okay, if I go over here, see temporaries, this one, and core staff, okay. core staff account for internally or for the company. So what can happen? What is the risk over here? So for example, I may be my gross profit margin for employed temporary staff is too high right now, or I mean too low. So what Leo would do is he would pass an adjustment entry and pass it to the company temporary account in order to boost the gross profit margin. That is one thing he will do. And that is what he's maybe Paula has put pressure on him that, mitigate the loss for the company, or something like that. So right now, if you see 2216109, okay, so possibly entries have been passed from employee temps account to company temporary account in order to maintain or bring the stream into more profitable. Okay. Another risk is that I don't know how many credit notes are being passed. Okay. I don't have the breakup for that. Okay. There may be inaccurate credit notes that are being recorded. Okay. In reality, maybe for the sale return basis. Okay. Sale invoices are being recorded on wrong basis as well. Okay, manual entries for accrued income, simply you might be overstating your income. Manual entries transferred to account 7003 core staff salaries. You need to understand, so companies, so entries might be passed from company temporary account to employees. Now check this out, this is positive, right? So come there, so what Leo might have done is he's passed an entry from company temporary accounts, so which is what, so he's passed amount of Gazelle's core staff from temporary cost account to staff salaries. So he's passed it from company temporary account to employed temporary account 2033 in order to make it more profitable, and which is 2216. Because if I take this out, this will have a very low profitability, right? So Leo is being sneaky and he's under pressure. Okay. Okay. Possible or ethical point to be raised. Okay. Now, Melissa, you need to understand one thing. She's helping Leo to post purchase invoices, and she's also posting permanent job. Okay, permanent job service invoices. So Melissa helped Leo post company temp purchase invoices to account code, and Melissa also helps to post invoices for service provider that sells client by employed temps account. What is the risk? And my side, risk could be ethical point, you can say, possibly um uh undue pressure by Leo for posting entries. Okay. So you can talk about objectivity, integrity, professional care. Okay. Then she is a trainee. She is only there to help and not post. Okay. So you need to understand that. Okay. Okay, if I go a bit down, so again, see entries recorded by Melissa training. I've explained about that. Paula can pass entries for prepayments. Again, she might create inaccurate prepayment account in order simply to boost her current assets. Unauthorized transaction that may be recorded above threshold. So possible finance. If I talk about a Leo, right? So I've talked about the threshold part, right? So yeah, these are a couple of points. I've explained about this as well. Please take a note, HR manager does not report the FT. It should be the at least HR director, HR head. Okay. Take care of the gross profit as well. Okay, and now what kind of questions can come? Okay, so I'll just tell you something. This is one of the paper in July 2021. Expect similar question. Okay, so you could probably have, let's say, in respect of the three audit issues raised, okay, by the client, let's say he can talk about from permanent staff point of view and temporary staff point of view. They would set out and explain the appropriate financial reporting treatment and identify and explain the audit risk. So what would you do? So for example, they might ask you, let's take an example of permanent staff. For permanent staff, okay, there might be an issue of contract modification. So you will provide the right treatment. So you will say as per IFRS 15, when there's a change in scope of contract basis, contract modification should take place, apply to the scenario, okay, and provide the journal entries. Provides journal entries. It is a must, okay. Provide journal entries. Okay. If this stated, you can also provide evidence from the scenario that as per account number 2001 or whatever it is from the data analytics, we can evidence that this is a wrong entry path and the right entry should be debit receivable, credit sales, something like that. And then you can provide the audit risk as well. So you can say, for example, risk of revenue being offset at a year end. Okay, there's a probability of inaccurate contract modification taking place. So a couple of such points, okay? You could again have a similar point. You might, the question might give you some analytical procedure you need to perform. For example, perform a ratio analysis from current year against prior and identify any significant variance in the accounting heads. Okay, but again, couple of questions like this can come. Okay, this is not a performer, but similar questions can come. You don't need to provide all of this, by the way. You can simply keep it simple. See, identified he's identified IFRS 15 and applied it. Then he's also provided evidence, the performer invoice posted in 2020. So you can provide the evidence, the correct entry, and then the audit risk. So far, I think this is about it. Try practicing. There's a similar question in the revision kit as well, question bank regarding this scenario on staff. It should be around June, in November 2017, question 3, I believe, or June 2017, question 3, either one of these papers. Okay. There's a scenario similar to this. Also check out question 3, 2018, July, sorry, and November 2018 as well. Okay, and obviously for 2017, check out July and November question 3. Similar scenario is there. Okay, so this is it from my side. Please take care of the materiality. You need to use it in your reference as well. Identify any potential related party transaction. It can come. IFRS 9, not so much. You should be aware. There's no concept of hedging over here, but practice auditing questions, all question trees from the question bank. It should help. And yeah, so this is about it. And hopefully, I hope you have a good walkthrough of the scenarios over here. And hopefully, you've got a grip of it. Take care.